Let's move on and put the spotlight on the insurance space. Before we get to some experts going in that direction, let's get you what exactly is happening there. My colleague Anurag Shah is now joining us with a story on that. In fact, the story deals with you because your health insurance premiums could get slightly expensive amid the new norms on reduction of waiting period and moratorium period. Anurag Shah gets us exclusive details. Anurag.
Health insurance premium is set to increase, and as per our sources, across the various categories, insurers are going to take a hike of 7 to 10%, and the main reason for increase in health insurance premium is claim experience, loss ratios on particular products, and the recent IRDA regulation, the master circular on health insurance, which mandates insurance companies to cover pre-existing disease also, because the IRDA has mandated that the moratorium period to be reduced from 8 years to 5 years. Maximum pre-existing limit has also been reduced from 4 years, 48 months to 36 months. So according to insurance companies, all these recent changes will have an impact on claim outgoes. Claim outgo will increase, claim frequency will increase. Market leader New India Assurance has already said during the Q1 interaction that on an average they have increased 10% premium on their various policies, and now going ahead the hike will not be in the age bracket. Instead, the hike will be on the yearly basis. So that is a on record statement by New India, and other insurers are also planning to increase the premium due to their claim experience and the IRDA regulations.
Very much for that. Now let's go to Madhukar Ladha. He's the Director Equity Research at Nuvama Institutional. Madhukar, you must be listening to my colleague Anurag earlier. What are your thoughts on health insurance stocks? Of course, premium going up, but last few weeks we are seeing that there is a lot of buying activity happening there. Do you think that the health insurance stocks, the worst is over? Last few years they were in a very sideways kind of a time.
Sure. So, I think in terms of premiums actually going up, this was very much expected. One reason was, of course, the master circular. Waiting period has been reduced to 36 months. Moratorium has been reduced from 8 years to 5 years. And there are a whole host of other changes to sort of, improve the claim settlement experience for policyholders. 4 hours discharge from hospitals and those sort of things, right? Now, apart from that, almost all health insurance companies have reported numbers where they've said that the number of instances has increased. The heat wave has been severe, so as a result of that, the claims and loss ratios of these companies has also increased. Last year also we had heard that because of the rainfall, we had a high number of dengue cases. So the last 2 years, the private health insurers and private general insurers in the health space have already been increasing their premiums. Star Health increased premiums on their largest product by about 25% last year. This year, they plan to again increase rates by about 10-15%. Lombard also has increased rates, and they're also seeing higher sort of loss ratios. So I think this is in line. And New India, for example, they had very high loss ratios, almost 105% in the last year, and combined ratio on the health segment was almost about 20%. So they have to take steps to sort of reduce these high loss ratios. So it's in line with that. And probably I think things should improve from here, given that, these price hikes will get affected, and, companies will get a little bit more prudent in the group health insurance side with at what pricing they accept business. So valuations also have corrected, especially for Star Health. If you see, the stock has come off quite a bit as well. So I think increasingly things are getting more interesting for the space. New India is a little bit tougher to comment on because it's a bigger PSU, and we see consistent high claim ratios and high loss ratios are there. So that stock is a little bit tougher to sort of call out as to whether this has bottomed out. Yeah.
So, okay, fine. I want to understand how are the valuations looking. You spoke briefly about some of the commentary coming out of, and of course, the price hike, the premium hike moves. How are the valuations looking in most of these stocks for the next 2 to 3 year basis?
And for Star Health is pretty much looking a lot more attractive now at closer to 575 rupees. Lombard is a little bit more expensive. So Lombard will be at about 32, 33 times, and Star will be closer to about 25, 26 times earnings. So in that sense, yeah, the valuations are, valuations are on the higher side. I mean, I don't think uh, the stocks are really cheap, but given that these price hikes have taken place and probably things will improve from here on, valuations are probably looking better, especially for Star, than before. Yeah.
Fair enough. And what about the implication in terms of some of the other policies with a high sum insured? Could they also witness hikes? What would the impact of this be, according to you?
So even over there, with you should see price hikes across the board. Medical inflation has also been high, and in general, you know, this was sort of very much expected, and company and the private general insurers and standalone health insurers have been taking price hikes on a product-wise basis gradually over the last, ever since COVID. I think right from FY 21, 22, that FY 22 onwards, we are seeing sort of increase in prices at different sort of product levels. Yeah, so this will continue. Yeah, my sense is. Right.
All right. And what do you believe would be the overall outlook in terms of the growth for the industry? There are predictions of about 9% for July. What is the overall outlook that you're expecting for the sector as a whole? And within this space, given that you track the individual companies, can you walk us through your outlook on which could be potential outperformers?
So, in the space, I would say that both uh, in health insurance, we have the group and retail health as verticals. I think both these segments should grow in the range of 17 to 21, 22% year over year sort of numbers is what I would still expect them to grow at. And within that, I would say that for someone like Star Health, we would expect a slightly lower growth number, given that it has a much higher retail health market share, and they're more sort of prudent in their underwriting practices. So we would expect them to probably grow their retail health vertical at about 16 to 17%. Group health there they would grow a little bit more, and overall, my sense is that they should deliver about a 17-18% growth in health premiums. Lombard, my sense is that the growth can be much stronger. So retail health, one should expect about a 24-25% growth. They have a much lower market share. They've also launched a new product. So there we should probably see a much higher offtake. And Lombard also has a very strong presence in the group health segment, and they're a little bit more aggressive over there. Q1 number of growth was also much stronger for them in the group health segment, 30% plus sort of a number. Over the year, I think it should moderate, and you should still see, at least my sense is, about a 25% growth in group health even for them.
Thank you so much for joining in and sharing with us your outlook on the sector as a whole.
If you like this video, then like, share and subscribe to ET Now.